Hi, today is June 18th, 2026, and this is our news brief on tech and small business. PwC 2026 Global AI Jobs Barometer. AI fluent workers earn 62% more as labor market splits into two tracks. So the barometer analyzed 1 billion job postings across 6 continents, right? So it was published on June 15th, and the market is split into two tracks. Personalized roles, so AI elevates judgment, grow 2 times faster with a 40% higher salary growth than democratized roles, like AI makes the work easier for non-experts. Workers with AI skills like prompt engineering, machine learning, model evaluation earn a 62% wage premium, up from 57% last year. Entry-level AI exposed roles are now 7 times more likely to require senior level judgment. Demand is up 35% since 2019, while standard entry level positions are down 10%. So the context here is this is the 3rd consecutive barometer. The year-on-year increase in the AI skill premium is the largest since tracking began. Companies in the most AI exposed sectors grew headcount 52% since 2018 versus 30% for the least exposed. The gap is structural, not cyclical. So the implication is that workers who demonstrate AI fluency, right, not just exposure, are in the premium tier, not the at-risk one. Right? Businesses treating AI as an IT experiment rather than a workforce strategy are building the wrong talent pipeline for 2027. SpaceX acquires AI coding startup Cursor for $60 billion 4 days after its IPO. Right? So they disclosed $60 billion all-stock acquisition of Cursor for just 4 days after listing on the NASDAQ for $1.77 trillion valuation. So the deal absorbs xAI, which is merged with SpaceX back in February of 2026, and is expected to close Q3 of 2026. Cursor is the leading AI coding assistant amongst developers and one of the few products with proven reoccurring B2B revenue. So here's a bit of context. SpaceX holds compute contracts with Google, so $920 million a month, and Anthropic, $1.25 billion a month. It is simultaneously a supplier to and competitor of the companies it rivals in the developer tools. But AI coding is one of the few proven revenue categories in AI. Like Microsoft with GitHub Copilot and SpaceX are consolidating here. SpaceX used its new public equity as an acquisition currency. So the strategy is to consolidate AI tools aggressively rather than sit on IPO proceeds. Developer tooling is consolidating into mega platforms. The window for independent AI coding tools is narrowing, and operators using Cursor should expect roadmap shifts towards AI and Grok, basically they're shoving it down our throat, integration through 2026 to 2027 as acquisition closes. This is interesting to see because there's also other open source tools, other development tools coming out. So how will Cursor and these premium paid tools compete? We'll see. And competition is really good, right, for the consumer. OpenAI audit financials show $38.5 billion of net loss in 2025 and a $17 billion dependency on Microsoft. So audit financials verified by the Financial Times show OpenAI lost $38.5 billion in 2025, nearly 8 times its $5.1 billion loss in 2024. Let that sit for a second, right? It's just burning cash, right? Losing money. The company spent $34 billion against $1 in revenue. Right? $17 billion of that flows directly to Microsoft Azure. In Q1 of 2026, OpenAI burned $3.7 billion on a $5.7 billion in revenue, unprofitable but improving unit economics. OpenAI projects a $14 billion loss for a full year 2026, then a $100 billion revenue run rate by 2029. So a little context here, losses are structurally driven by compute costs. Training frontier models at scale costs more than the subscription revenue generates. Like right now, I spend $200 a month in compute, but from understanding, they're heavily subsidizing it. It's worth probably $4,000 or $5,000 a month. So you can imagine like they're subsidizing so much to get people to use their flagship frontier models, and that could only last so long, right? So these disclosed are widely interpreted as pre-IPO positioning. OpenAI's public offering timeline remains unconfirmed. So implications, the AI tools most businesses depend on run at a loss, right? Pricing pressure will increase as these companies manage to grow profitability. Microsoft holds structural leverage over OpenAI's operations. Any renegotiations of terms could shift enterprise AI pricing without warning. So this is one of the things I kind of have in my back of my mind. We're using this, cheap, right? $200 a month subscription, but at any point there's increase in costs. Microsoft changes their terms. They're like, hey, it could jump from $200 to $400 to $800 really quickly. So here's your report for June 18th, and follow for more in the future.